So the Fed is expected to cut rates by 25 basis points tonight. At the same time, Trump is hinting that a successful trade deal with China is coming soon. So what does all this mean for the US dollar and gold? Let's break it down. Lower rates usually weaken the dollar and support gold. But when a cut is expected, as suggested by the FOMC themselves here back in September, saying that the rates were likely to move lower over the remainder of 2025 with 2 more cuts the most likely outcome, these cuts tend to get priced in, and in some cases the market starts to focus on future rate cuts instead. If Powell signals that this is the last cut, the dollar could bounce. I would expect a short-term spike to the upside, then the sell-off back down into 3846, which is my final target for this correction. But if it leaves the door open for more rate cuts in 2025, expect risk off and gold strength. Meanwhile, the US is locking in rare earth supply chains, building long-term independence and reducing its reliance on China. Trump is set to meet with President Xi today and says a successful trade deal with China is close. In my opinion, this flips the tone, adding more risk on fuel and potential short-term USD strength. On one hand, you have the US signing rare earth and critical mineral deals with Australia, Malaysia and Thailand, and now Japan, and now another huge potential trade deal with India as well, all supporting a strong US dollar and risk on sentiment. On the other hand, obviously we have interest rate cuts, which generally leans into a risk off sentiment, weakens the dollar and supports gold. So what do you guys think? I want to hear your thoughts down below in the comment section, and if you want the full breakdown, comment macro and I'll send you the link to join the newsletter.